Good morning, good afternoon, and good day, everybody. This is Carter Froelich again with the Property Ledger, and welcome to today's educational seminar, What Will It Cost to Operate My Property? And today we're going to be looking at determining operating expenses for an income-producing property. So let's just jump right into today's session and with a definition of operating expenses. And an operating expense is any expense paid by the property owner in order to keep the property generating revenue. Now the thing I'd like to make clear is that operating expenses do not include items such as mortgage payments on the property, depreciation related to the property, or capital improvements made to the property. Now the difference between maintenance and repairs and a capital improvement lie in the fact that a capital improvement will extend the life of the property. So say for instance if you are replacing the roof of your property, that obviously is going to extend the life. Therefore, it's a capital appreciation that has to be depreciated over its useful life, as opposed to maintenance and repair that can be expensed in the year that it's incurred. Now, a good example of maintenance and repair item might be replacing a kitchen sink faucet, for instance. So what are some of the more common operating expenses that are found in operating properties? And you have before you a list of some of the more common ones, everything from accounting and advertising, cleaning, commissions, homeowners association dues, property insurance, landscaping, snow removal, legal, maintenance and repairs, management fees, obviously your property taxes, any utilities that you as the landlord would pay on behalf of your tenants. And then the other thing would be a reserve for replacement, which is here again you setting aside part of your revenues generated by that property to replace items that will need replacement over time, such as hot water heaters, appliances, etc. And if you're not providing for this in your operating expenses, I really encourage you to do it because this can obviously add up to be a big ticket item, and you want to be safe rather than sorry when you're determining your operating expenses. So please be very conservative when you're estimating these things. Now, some of the tips that I can offer in relation to determining operating expenses when you're buying an income producing property is to not only review what the seller is showing that their operating expenses are for reasonableness, but also ask the seller to provide their prior tax returns. And when you take a look at the tax returns as it relates to this particular property, you're going to get a real good feel for whether or not the seller is telling you the truth in relation to their expenses. Very rarely do you see somebody holding back on the expenses related to a rental producing property when they're reporting income and expenses to the IRS. So this is a great source to get the true picture of what these expenses will be. The other thing is when you're looking at the property taxes and the property insurance line items that the seller is showing, make sure you go back in and recalculate what the property taxes will be given the new basis in the property. Depending upon whether you're purchasing at a higher price or lower price than what the seller had acquired the property for, those property tax numbers are going to change. And as a result of purchasing a property at a higher basis or lower basis than the seller, your property insurance rates are also going to change. So call your insurance specialist, tell them what you're looking at doing, give them a description of the makeup of the property, and they'll be able to give you a good quote on what the property insurance will be. In relation to the utilities, you can call the utility companies for current utility usage and costs related to that structure, whether it be gas or electric. Also, you can contact the city in which the property is located to get water usage, trash, etc. And then last but not least, make sure you're factoring in a management fee for yourself or for your property company. If the seller is not showing that, your time is worth money, and you want to make sure that you're showing that whether you're doing it or the property management company is doing it. To the extent that the seller hasn't shown a management fee item, make sure that you talk to them why you're including this and why, as a result of having more expenses related to this property, you're not necessarily able to pay them what they would initially like, if that is in fact the situation, or that can help you negotiate better terms. Obviously, if you're using the property ledger as it relates to evaluating your real estate acquisitions, you know from the operating expense portion of the property ledger that we go to great detail to include just about every type of operating expense we can think of to make sure that those items are jogging your memory so that you can come up and evaluate the property to the best of your ability to ensure a successful transaction. Once again, we'd like to thank you for taking the time to visit with us, and hopefully you'll be participating in additional educational seminars in the future. Thank you very much.